And Brian joins us once again now from the Goldman Energy, Clean Tech, and Utilities Conference down in Miami. This time, Brian, with Neil Mehta, I understand.
Yeah, head of America's Natural Resources Equity Research at Goldman Sachs. So we're just going to get right to the stock part of this program. I mean, we've been talking about Venezuela, talking about oil, talking about everything all day long. Let's get down to the meat. Make your clients and our viewers and listeners some money. Let's start with Valero.
Yeah,
Neil. And first off, welcome and thank you for having us.
Thank you so much.
Thank you for having us at your conference. It's been a heck of a day. Valero, stocks on the move today. The idea that if we have more Venezuelan oil, they will likely process it. Is that a good thesis, or is the stock overreacting?
First of all, Brian, thank you so much for being here. We have over 900 clients here. It's our best conference yet, and having CNBC and having Chris right here today has been a real treat. I'd say on refining, it is the part of the hydrocarbon complex that we are the most constructive on. When you look at the supply demand over the next 5 years, we're only going to add 2 million barrels a day. Net in that same period of time, demand is going to be up 4 or 5 million barrels a day. So the market is tightening, and margins should be structurally higher than history. Positioning is pretty negative on the space right now. And for Valero, they are the low-cost producer in the Gulf Coast. Now, you asked an important question about Venezuela. It's very unclear how these flows will play out, but it does seem like there's more heavy heading to the Gulf Coast. To the extent it is 500,000 barrels a day, that's enough to dislodge some of that local crude, and it should accrete to Valero in particular, which has the ability in assets like Port Arthur to run that really heavy Venezuelan crude. So Valero's on our conviction list, and we're very positive on the story.
Well, when the news of Maduro's arrest and capture came out, the initial market reaction was the stocks like a Valero up, but the Canadian stocks down because a name like a Suncor, a lot of the Canadian oil, for lack of a better term, is fairly similar to Venezuelan oil in terms of its viscosity and how thick it is and density. Suncor's up a little bit today, but it did fall earlier in the week on that news. Was that an overreaction by the market?
We think it was an overreaction. To your point, Western Canadian crude has backed off by $3 this week as a result of the Venezuela headlines, because it will mirror what happens on the Gulf Coast, and it does compete on the Gulf Coast against the Venezuelan crude. Suncor has very little sensitivity to changes in that local price, the Western Canadian crude price, because it has a large refining business, so it's fully integrated. Suncor came to our conference and absolutely crushed it in terms of their operational update, beating our estimates by 6%, and continues to have very strong momentum under a change agent here, under Rich Kruger, who's really driving the business in a positive way. So for those who are worried about widening Western Canadian differentials, don't worry about Suncor. The story we're very much behind.
You know, Dom and Kelly in the break coming in, they teased the data center build out, the need for AI-powered energy, et cetera. And a large part of that has been what they call the IPPs, the independent power producers, Constellations of the world, the Vistra Energies of the world, the NRGs of the world. And they've got some contracts, but you get my broader point. They have made investors a lot of money over the last year or two. Is all the money making done in those names?
Well, I think we have to go broader. We have a bullish view on utilities, the regulated utilities. We actually have a neutral view on the independent power producers at this moment. We love the electrification theme, though. So we are still very much a supporter of a number of stocks that have exposure to it. One example who presented at the conference is Cameco, which
uranium company.
Uranium company, the largest uranium producer in North America. And nuclear is going to be a necessity to meet all of this base load power needs that data centers are going to provide. We anticipate a 2.6% CAGR in power demand between now and the end of the decade. Nuclear has to be part of the solution, as Secretary Wright spoke about earlier today. And Cameco is a great way to get exposure. As for the IPPs, stocks have done very well at this point, and so we're looking for a better entry point before re-engaging.